why there is a BRICS, because they want to get away from, their view is the danger of holding dollars. And that's one reason why many of these central banks have been buying gold very, very strongly for the last 2 or 3 years, because they understand.
What does the Fed do in response to that? Do they just simply lower interest rates back to zero? Maybe. Do they go back into QE? Maybe. Do they launch another, TARP, TALF, helicopter version of helicopter money? Maybe. But here's the big difference. Every other time in history, since 1987, that the Fed went down that road, they did it many times. They did it in the Thai baht collapse, Russia collapse, 2000 Nasdaq collapse, 2008, 2019 repo crisis, 2020 COVID. I mean, they've done it over and over again. Every time they've done it.
In the midst of growing economic uncertainties and deepening geopolitical tensions, the allure of gold has surged, driving its price to eclipse the significant $2,000 threshold. This move is more than a reactive shift. It signals a deeper change in investor mindset as confidence in traditional financial systems wanes against the backdrop of central banks' intricate dance to curb inflation without hampering economic growth. Figures like Bill Holter and Michael Pento, with their deep insights into the precious metals market, underscore gold's intrinsic value in today's digitally dominated, debt-laden financial landscape. They advocate for gold's irreplaceable role as a tangible, non-fiat asset in a world increasingly skeptical of digital currencies and concerned about national debt levels. Despite the Federal Reserve's interest rate policies, which typically dampen allure for non-interest-bearing assets like gold, the metal's ascending value highlights a growing demand for a dependable shield against potential currency devaluation and inflationary pressures. This resurgence in gold's popularity not only reflects its enduring appeal as a financial safe haven, but also indicates a broader search for stability and security among investors, uneasy about the fiat currency system's long-term viability in preserving wealth. As we navigate through these turbulent economic waters, gold's enduring glow offers a beacon of stability, representing a collective yearning for reliable havens amidst a landscape of financial uncertainty.
Gold has a new role. I think the role of gold is money and everything else is credit. I mean, J.P. Morgan testified close to those words in Congress. The reason you want to own gold, or the reason you want to own silver, is because they cannot default. And what we talked about earlier, the world being, or literally the whole world, but led by the U.S., is hyper indebted, and we're moving into the phase, and you're already starting to see it. We're moving into the default phase, and that's why you want to own gold. That's why you want to own silver, because in a world that is defaulting around you, gold nor silver can default. And it goes back to Richard Russell, for years and years and years, said that when it finally blows up and goes down, the one who loses the least will be the winner. There's not going to be any outright winners that profit from the collapse, but there will be those that have gold and silver. They will have capital when the system reboots, when the bulk, the majority, especially if you agree with the great taking, which I do, because I do believe that that's the plan, is to basically take your assets. If you have capital when this thing reboots, your family will have wealth for generations upon generations.
This particular program printed $400 billion. The program, the Fed, because of this program, printed $400 billion in 2 weeks to bail out the entire regional banking system in the United States. That is why we didn't have a recession. And so obviously I didn't know that the Fed was going to do that. They did it, and I changed my strategy and my opinion about the problems we would face in 23. But That's what they did. Now that program's going away, and I just explained to you how bad it's going to be for banks, because let's just say we have, for example, there's $1.5 trillion of commercial real estate loans that are going to come due in the next 2 years. These loans are 40% underwater now. So you can't tell me, you can make an argument that, Michael, well, it's not going to be 2008. But don't tell me that there's not going to be any stress in the banking system, and that these regional banks, which are responsible for 30% of all of their assets, 30% of all assets, their commercial mortgage-backed securities and mortgage-backed securities, 30%, they're not going to be able to make any loans anywhere near the extent that they have been in the past. And we have a debt-based fiat currency system. And when you make a loan, you create more money. That's how you create money. And when you create money to make a loan for the purchase of capital goods, that's how you grow. You grow the economy that way. It's the productive side of the economy. That's going to be completely impaired. It's already impaired. It's going to get a lot more so come March and April.
Gold has been regaining ground in the past few sessions following its bounce off the 2024 bottom of 1,984. Although the price has recouped a significant part of its losses, it has currently stalled at the congested region that includes the 50-day simple moving average. Now we'll show you more clips of Bill Holter and Michael Pento, but first, subscribe and turn on notifications, and check our pinned comment for some massive sign-up bonus if you want to add crypto to your commodities portfolio. Enjoy the video.
Generalists basically chase trends. And what we just discussed, they've suppressed gold, they've suppressed price, they've suppressed the miners. So you're not going to have the generalists follow that because the price action has been horrible. They've painted the picture. So the generalists, what are they buying? They're buying the Magnificent Seven. As far as metal flowing out of North America, that's an easy one. All you have to do is look at the premium in Shanghai for gold of $50, and there's a premium north of $2 for silver on the Shanghai exchange versus the COMEX and the LBMA. So you've got natural arbitrage that's buying gold in the West, buying silver in the West, and selling it, and in Shanghai, selling it in the East. So you've got, and they're locking profit in on every single trade. It's automatic profit. As long as it gets delivered, it's insured, and you get paid on the other end, you've locked in a profit. So you're watching metal flow from west to east. Foreign buyers, look at Japan and China. They were the two biggest holders of treasuries. They've been bleeding their treasury holdings down for years. And just look at the BRICS. Why is there such a thing as the union of the BRICS? The whole idea behind it is they want to get out from under the boot of the US dollar. Because they understand that the dollar is strictly a fiat currency. It's a Ponzi scheme. And if you listen or read any of Putin's speeches, you'll hear him every time say, we want to do business, but the trade that we do, we want to be fair trade and fairly settled. In other words, they want to trade something real for something real, as opposed to something real for something that's nothing. And that's what the deal is. The U.S. does not. We have a huge trade deficit because we get products in and we send freely printed dollars back out, and that's why there is a BRICS, because they want to get away from, their view is the danger of holding dollars. And that's one reason why many of these central banks have been buying gold very, very strongly for the last 2 or 3 years, because they understand where this goes. They're going to end up with big black holes within their balance sheet that used to be dollars. So they're trying to replace those with something that's real and something that will go up in purchasing power as all these fiat currencies collapse.
And it all points to one thing. Are we headed to 2008? Another 2008? I think it's highly likely. What does the Fed do in response to that? Do they just simply lower interest rates back to zero? Maybe. Do they go back into QE? Maybe. Do they launch another, TARP, TALF, helicopter version of helicopter money? Maybe. But here's the big difference. Every other time in history, since 1987, that the Fed went down that road, they did it many times. They did it in the Thai baht collapse, Russia collapse, 2000 Nasdaq collapse, 2008, 2019 repo crisis, 2020 COVID. I mean, they've done it over and over again. Every time they've done it, there was a condition of deflation. They were fighting deflation. And deflation, by the way, Dunnigan, is a healing process. It is. So recessions and deflation are a way to heal the economy from the excesses. It's creative destruction, sort of, in a way. A version of it from Joseph Trumpeter talked about it, famous economist. So the next time the Fed does this, the next time the Fed goes back into QE mode and ZERP and QE and helicopter money.
What do you think of today's episode? Do you agree with Michael Pento and Bill Holter? Post in the comments section down below your thoughts on the show, and check this video right here because you'll love it. I see you on the other side.